Hey guys, welcome back. In today's video, we are talking about the AMC all-time high, brokers failing, the shorts liquidation, and many more in this video. Firstly, we're taking a look at this. AMC and GME 13Fs, both at all-time highs, especially when you factor in splits, makes it even more impressive. One of the things we've been looking at has, of course, been the institutional ownership for AMC and GME. Now, the reason why we take a look at it is because we constantly see articles about how AMC is a bad company, why you should sell your AMC, why you should never buy AMC. And so we have to obviously understand, is that actually the truth? And so when we take a look at institutional ownership, what we understand from that is that these news articles are trying to get you to sell so that institutions can buy themselves. And that really just shows how much value they think there is for AMC and for GME. When you take a look at the ownership for AMC and our ownership for GME, you will see this exact thing. And so this is what we've said with how multiple companies realize just how undervalued AMC and GME is, just how suppressed both stocks are, and that's why they constantly are buying and accumulating more and more shares daily, whether it's day by day, whether it's monthly, or whether it's quarterly. And so when you see these articles that are trying to get you to sell, you have to, of course, always do your own due diligence. And one of the biggest way we can determine whether or not they're saying it for the benefit of you or for the benefit of themselves is by looking what actual institutions are doing. Because anyone can make an article and publicize it, but it's a completely different thing to spend your own capital and buying this. And so what we can see is that the articles and the institutional ownership are obviously telling two different stories, and we know which one's the truth and which one is the lie. Another thing is shorts never counted on the apes still being here almost 5 years later. They also bet AMC would have been bankrupt 4 years ago. I bet they really hate knowing that we understand where our company is and knowing the extra shares they're nailing the coffin for the short thesis. And so going back and going off of what we were talking about just at the very start, these articles have always been under their impression that apes think AMC is a bad company, that whenever they see these articles, they will sell. And so that's what the short sellers have been hoping on. But the truth couldn't be further from that, because apes know exactly what is happening. We know that all the suppression methods, all the manipulation tactics they have used on AMC. We know how well AMC has been operating. We've already done a thorough dive into the fundamentals of AMC. We've been here for the last 5 years, so we understand exactly how AMC has grown themselves, how AMC has operated, how AMC has improved. And now we're obviously coming to another pivotal point of the AMC timeline, where we obviously have something that could put AMC very far ahead. Now, I've always said this isn't me forcing you to vote yes. This isn't me telling you whether or not you should vote yes or you should vote no. This is, of course, I've always said, you should always do your own due diligence and understand what is going on. I'm only here to give my opinions and also to highlight some of the certain factors, which is, firstly, people are still under the impression that authorization of shares is the same as issuance. They think because AMC wants to authorize 550 million more shares, we are going to see it instantly get diluted by 550 million more shares, which is not the case. And we talked about the real issuance should be under 100 million, or it should be even under 50 million, is within a range. And so this is what we've said with how you have to understand different factors. Don't let the articles take you into their perspective and then let you think that something else is going on when it's not. Make sure you understand what's happening. I'm not saying there is no dilution, but the dilution is nowhere near what these people are trying to make it out to be. And you also have to understand is that we have already talked about how much synthetic shares of AMC exist out there. If you've been in this play and you want AMC to squeeze, you would know and understand that there are billions of AMC synthetics. And so even if AMC were to issue out all 550 million shares of AMC and give it all to shorts, so none to retail, and give it all to short sellers to cover, remember, it still doesn't cover the billions of synthetics that they have created. And so if they did decide to do that, and once again, this is a very big if, but this is just for people to understand exactly what is going on. if AMC did decide to give all 550 million to short sellers, all 100% of the shares, then if they wanted to let them out again in the future and issue more shares, then we obviously then wouldn't vote yes. And so that's what we have to understand with how these short sellers aren't going to get out of the synthetic situation just by having 550 million more shares. And this is the fact that we're not even issuing out 550 million more shares. So that's the point I want everyone to obviously understand. And you also have to realize is that, remember, they're still stuck in this play. You can see 75.8% of stock derivatives are traded in the dark pools by banks. So we know that this is obviously the manipulation that is happening. And when you take a look at AMC, 63% in the dark pool, over 16.9 million shares traded off exchange. So we have to realize this. They are burying real demand while we keep buying. And you still think that AMC is dead? It is not dead. It is suppressed. This is what we're going back to what we said at the start. When you take a look at the institutional ownership, people have been constantly buying. We can see it from the chart. Institutions have been buying, wherever it's for AMC or wherever it's for GME. Now, when you take a look at what the apes are doing, apes have been buying. The retail has been buying. So we're in a market where retail is buying. We're in a market where the institutions are buying. And so if the two biggest party are buying AMC and GME, how comes we're not seeing the price go up? And this just goes back to what we're saying with, of course, the dark pool usage. And so this is where you have to understand. If they aren't scared of AMC, if they're not trying to suppress AMC, if they're not scared of the fact that AMC going up in price will liquidate and margin call so many short sellers and institutions and bankrupt so many short sellers and institutions, they wouldn't be using dark pool as viciously as this. You have to realize the average market, the dark pool that we're looking at on the market is 20%. We are looking at 63, and even 63% has been low for AMC. You will see AMC sometimes at 65, at 70. We've even seen it above 80. And so that's when you really understand exactly how suppressed AMC is. And talking about another party that's failing, we're looking at the brokers. And what we can see recently is how crypto brokerage is not allowing you to trade or transfer. One of which mentioned is, of course, Robinhood. Now, we should already know by now that Robinhood has had exposure in different various markets. And from what we've seen in the past, it doesn't look like they have a good management on their risk exposure. So once again, when we're seeing these brokerages not allowing people to trade, you can expect that it's not because they wanted to protect the retail, but it's because they wanted to protect the institutions. Now, we're not going to talk about how they're always protecting the institutions. What we are going to talk about is the fact that if they are in the need of protecting institutions, that would mean that these institutions are facing liquidity problems. They're facing problems where they need to be protected. And so with the recent crypto margin call that we just talked about, we've seen over $20 billion being liquidated and many more in, what we've seen. This is what we are looking at with how the short collaterals are failing. And another example of, Robinhood and just how brokerages aren't here to help the retail. You can see Robinhood falsely claimed that AMC Theatres filed for bankruptcy on May 1st, 2023. In the weeks following the false alert, AMC's stock price dropped more than 20%. So a company that is supposed to benefit the retail, a company that is made for the sake of retail, then managed to get one of the most favorited retail stocks information wrong and proceeded to, obviously, we've seen them do their things in the past, whether it's to remove the buy button, whether it's this particular case. And so you should understand by now, brokerages are here to help with their institutions. And so if we're seeing them in a situation where they are helping the institutions, it means that the institutions have put themselves in a very, very bad position. And that's what we are looking at. Another thing, better late than never. Global financial markets could tumble if investors mood sours on the prospects for artificial intelligence or the independence of the US Federal Reserve, the Bank of England warned on Wednesday. So essentially what they're saying is how the valuation on the US stock market right now is extremely high. Now, another thing that they have been relying on is, of course, the reverse repo, is, of course, these easy access to liquidity. Now, what we could be looking at is at any point, and potentially we're seeing it right now, especially with what happened on Friday, that anyone decides that right now the market is bad and they pull out, it could easily trigger a chain effect which could collapse the market, especially with the focus on AI right now with the circular financing. And so this is what we've said with how the market is not stable, but AMC is putting itself in the correct position and is navigating correctly, especially with what they're doing. And so make sure you factor in everything we've just talked about and understand what's going on. We've known what AMC is doing. We see how the shorts are failing. And so we are in a very good time. And you guys, as always, know this is financial advice, so do take advice according to so make sure to do your own due diligence research, and I'll catch you guys next time.